Good day, my darlings. Good day, family. How are you? Top of the morning, top of the hour, top of the day, whatever it is for you. Do you know who you're tuned into? If you don't, you better know. Click, subscribe. Corinne Chronicles. You guys know the story. It's all about my crazy life. Real estate, the baby, buying houses, flipping, renovating, the whole Shabbat, and helping my wonderful family along. So today, it is imperative, and I felt like, some days I take you out and about, show you what's going on, but today we're just talking shop, okay? Today is a strictly talk shop day. It's raining out. I've been shopping, as you can see. I'm getting different things for different properties that we're renovating, and you guys are going to see soon. But today, we have to talk shop, family. Yes. Today's episode is Getting a Mortgage 101. Okay? Getting a Mortgage 101. 5 basic points that I want to go over with you. And that if you stick to this, it's a winning formula for success. I'm only telling you these things because I love you and I want to see you succeed. When you're going for a mortgage, just like anything else, you need to know what's going on with your finances, period. And one of the things that I think is invaluable when working on credit, working on mortgages, it doesn't matter what you're doing. So the first tip and trick is you need to be monitoring and understanding what your credit looks like, okay? Whether you subscribe to, I don't care what it is, Experian.com. I personally am subscribed to Credit Check Total, which is owned by Experian, as well as Experian.com. And yes, it's double, but for me, I use Credit Check Total to pull a tri-merge, which, if you guys don't know, that's pulling all 3 credit bureaus at the same time. Not all of the credit bureaus report the same things. So you need to understand, if something is reporting to Experian and it's not reporting to Equifax, you need to know that so that you can, either get it handled with Experian or handled with Equifax, whether it's good or negative. Especially if it's negative, you want it to come off. Sorry about the rain, folks. We are in the rain. Know your credit. Second thing, once you are aware of what's on your credit, you need to be mindful and you need to have your balances in order. So what do I mean by mindful and having your balances in order? Typically, any lender, any bank, when you're going for credit, whether it's a mortgage, credit card, whatever it is, they want to see your balances at 30% and under. So while you're monitoring your credit and you're looking at your credit, if you see that, okay, this balance is a little high, this is more going toward the 50% mark of the credit line. So for instance, if the credit line is for $5,000 and you're over $2,500, okay, now we need to work to get that bill back under $2,000, okay? Really under $1,800, all right? So paying down. Before you go for the mortgage, you need to understand what's on your credit, and you need to already have your balances at 30% and under. Now, it's not always the best situation. It's not ideal always. You're not going to always be at the limit you want, but you need to get as close as possible so that you can get the best rate. Everyone knows right now rates are at an all-time low, okay? If there's a bill, a small credit card bill, I hear people all the time say, oh, I've got a credit card for $500. Okay, so if you've got a credit card for $500, that balance needs to be under $100. Or you need to pay that balance down to under $100. Number one, because you want to build that credit and you want the credit card company to give you more credit. So it makes sense to keep it down and to pay it off immediately. I like to tell people, when you have a small credit card like that, pay your phone bill on that credit card. You can pay your phone bill in cash. You're going to pay your phone bill off. So pay the credit card, pay your phone bill with the credit card, and then immediately pay it off. Third thing, pay off what you can pay off. Now, I need to be extremely careful when I say pay off, because here's the deal. I'm telling you to pay off before you start the mortgage process. If you're already knee-deep in the mortgage process and your lender is saying to you, we've got to get this balance down in order to make your DTI, which is your debt to income ratio, more manageable for underwriting to pass the loan, then you need to take the advice of your lender. Let me explain it. And I'll give you an example of myself, for instance. I was in the process of buying a property maybe 3 years ago. And I had a couple bills that needed to be paid off, but I was already knee deep in the process. Now, here's the mistake I made. I just went right ahead and paid a $15,000 bill. I went right ahead and paid a $5,000 bill, and I went right ahead and paid a $33,000 bill, which was a car. Now, I actually created more of a paper trail and more of a nightmare for myself. I actually should have asked the advice of the lender I was dealing with, and he would have walked me through how I should have done it to create less questions. Let me give you an example. If you pay off a bill for 15 grand, anything over 5 grand, the bank is questioning, okay, where did you get the money from? So when you pay off bills like that, they want a whole paper trail of, number one, where you got the money from. If it was gifted to you, you're going to need a letter. If you just came out of cash out of nowhere like I did, they're going to want to know where you got that cash from. Where the heck did she get that bag of money from to pay that bill? Paper trail. So it actually creates a bigger nightmare. So again, I'm going to preface this. Everything I'm telling to you is advice, okay? And because of experiences that I've gone through in my 20 years of being in real estate, these are all the things and tips and tricks that I have learned. Always ask the advice of whomever you're working with. If you're working with your mortgage lender, your mortgage banker, before you pay off a large bill, if you're knee deep already in the process, you need to speak with them on how you should handle it paperwork-wise. Now, this step I think is crucial before you actually start the mortgage process. So let me give you an example. If you don't have no credit cards, there's a couple of tips and tricks you can use to acquire credit pretty quickly. Let me give you an example. You and your husband has an American Express card. He has a $10,000 limit on his American Express card. You have no credit. You guys are now starting to look for houses. I would tell the wife, ask your husband to add you on as an authorized user, an AU. And what that's going to do for you is that's going to boost your credit. So you're able to now build your credit off of his credit because he's got a great balance. $10,000 limit, that's a good credit card size for most people. So the credit card company will now start reporting that positive payment history that he has on that credit card. But that also could get you in trouble. So that is also, I'm advising you of that with caution as well too, because let's say, for instance, now hubby went and bought something on the credit card for $7 grand, and now the balance on the credit card is $8 grand. Now the credit card is reporting that both of you have balances of $8K, which for a credit card that's $10,000, that's a high balance. You're well over 30%. So that actually would hurt you because now they're going to say your balances are too high. So everything with caution if you're going to start building your credit. The fifth item, maintain. While you are in the mortgage process, you want to maintain the level of credit that the lender is saying is acceptable for your loan. So if they pulled your credit and your credit was at a 660, we don't want to go under a 660 because you know as you start to go down, you're going to start to pay and interest and everything else. Now, these 5 items, tips, tricks, whatever you want to call them, are necessary previous to the mortgage and during the mortgage. You do not want to make any purchases while you are going for a mortgage. No new purchases, no new crazy bills, nothing like that. You need to maintain what you have and what the lender knows you have, okay? Very important. I'm going to do another video on first-time home buying, different ways you can get assistance with down payment funds. I specifically want to speak about one of the largest non-for-profit organizations that help homeowners to buy homes with no closing costs, no money down. As long as you're qualified, you work, you can prove your work history, you can literally do this program, go through the housing seminar, and be able to get all these credits to you in purchasing a home to help you. So there's so many things out there to help you guys once you're knowledgeable on assisting you in buying your home. But we'll do another video about that. I wanted to do Getting a Mortgage 101 so you guys know the basics of what you need to be doing and what you should be maintaining while you're going for a mortgage. I really hope that these tips and tricks helped you guys. please, again, it's all advice, all in good spirit to help you get your home. Please, please, please come back. If you don't already subscribe and talk shop with moi, please hit that button, guys. You know I love you. So stay safe, stay happy home hunting, and do what you do to keep the credit good, okay? Talk to you guys soon.
I was a problem, they didn't care till I made it where I'm at. Said I would fail, there was no chance.